Welcome to Alpha Insights. I'm Juniper. Today we're digging into rare earths, some big deal making in the sector, and what it means for investors as we head into the trading week. Joining me is James, a markets analyst who follows critical minerals and materials. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Juniper. Good to be here.
Let's start with the headline. Energy Fuels agreed to buy Australian Strategic Materials in a deal reported on January 23rd worth about 447 million Australian dollars. Give us the short version. Why does this matter?
In plain terms, it's about building a Western supply chain for rare earths. Energy Fuels brings separation and existing processing infrastructure, while Australian Strategic Materials has metallization and alloying know-how. Put together, they can move ore through to finished alloys and chemicals, which are what defense and advanced manufacturers actually need. That vertical integration can shorten timelines and reduce dependence on non-Western processors.
Markets were closed for the weekend, so we won't see price moves until Monday, January 26th. But what should investors watch for from this deal once markets reopen?
First, listen for management to give integration details, how they plan to merge plants, what capital expenditure they expect, and what cost or timing synergies they see. Those specifics drive valuation. Second, watch any offtake agreements or government support. Subsidies or procurement contracts change the risk profile quickly. And finally, keep an eye on execution milestones, regulatory approvals, permits, and the first combined production targets.
Beyond rare earths, the note flags tungsten and scandium as moving up the priority list. Why are those smaller metals suddenly so important?
They're small in volume but big in strategic value. Tungsten is critical for defense and tooling, and stockpiles are lower while supply chains have tightened. Scandium is key in high-strength aluminum alloys used in aerospace and some defense applications. When governments or big manufacturers decide to prioritize security of supply, even niche metals can command premium pricing and quick policy support.
So, for investors thinking about exposure, are these speculative plays or something more concrete?
They can be both. If you want upside and can tolerate volatility, exploration or development names focused on tungsten or scandium could pay off if supply stays tight. But prioritize companies with clear production pathways, solid offtake agreements, or existing resource bases. For lower risk, look at firms that are vertically integrated or have government contracts. They're more likely to convert strategic demand into revenue.
The piece also mentioned recycling. Chemco opened a PET recycling plant in Gujarat designed to process more than 1 billion post-consumer bottles per year. How does recycling fit into the materials opportunity?
Recycling is an alternative supply stream. For commodities like scaling recycling reduces reliance on virgin feedstock and can win premium pricing when buyers want certified circular content. It's a different risk profile. Industrial execution, feedstock security, and contract volume matter more than geology. For investors, recycling plays can be more predictable than a greenfield mine, but they come with capital and operational execution risk.
You also flagged exploration updates. Prospect Ridge, K2 Gold, Aruma Resources taking an 85% stake in a project in Ontario. How should listeners treat those drill and deal headlines?
Exploration news is catalyst driven. Positive assays or successful drill results can re-rate small caps quickly, but they're binary. Deals like Aruma's show consolidation and shifting ownership that can de-risk a project if a more capable operator takes control. For sizing positions, keep exploration bets small relative to your portfolio unless you're comfortable with high volatility and the possibility of no economic discovery.
All right, practical advice. How should an investor think about positioning heading into next week?
Start by defining your objective. If you're growth oriented and can stomach swings, consider a concentrated position in vertically integrated rare earth players or junior producers with clear development plans. If you want lower volatility, recycling, or companies with certification credentials and existing commercial contracts are more defensive, and always size positions based on how much news flow and policy risk you can tolerate. Government actions can change the economics overnight.
Before we wrap, any short-term catalysts to put on the calendar?
Yes, integration updates from the Energy Fuels and Australian Strategic Materials teams, production and stockpile reports for tungsten and scandium, further drilling and assay releases from exploration names, the operational ramp at the Gujarat Peti plant, and any policy announcements from Washington, Canberra, or Brussels on critical minerals.
Great. Let's finish with 3 takeaways for listeners.
1. The deal linking separation and alloying is a clear structural move toward Western supply security. Watch integration details. 2. Tungsten and scandium are emerging as strategic, high-value niches. Expect volatility, but also upside if supply stays tight. 3. Recycling and certifications are legitimate, lower risk ways to play material demand, but evaluate feedstock, contracts, and execution.
Thanks, James. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. We'll be back with more updates after markets reopen on Monday. Thanks for listening.